Assalamu alaikum and a very good day to everyone. Welcome to our documentary presentation on market structure and macroeconomic policy in Malaysia. Today, we will explore how two important market structures, monopolistic competition and oligopoly, influence business performance, economic decision-making, and consumer welfare. We will also analyze how monetary policy, set by Bank Negara Malaysia, affects the operations of TLIV and Malaysia Airlines. To understand these concepts clearly, we begin with macroeconomics, the branch of economics that studies the overall performance of a country's economy, including Malaysia. Macroeconomics focuses on inflation, unemployment, national income, exchange rates, and long-term economic growth. In Malaysia, agencies such as the Ministry of Finance and Bank Negara Malaysia closely monitor these indicators to maintain stability. By understanding macroeconomics, we can see how global price changes, currency movements, and domestic policies influence the daily lives of Malaysians, from household budgets to business investments.
Market structure describes how industries are organized based on competition and the number of firms in the market. In Malaysia, we can observe all four main structures. Perfect competition exists in small-scale agriculture. Monopolistic competition appears in retail and FB sectors, such as cafes and bubble tea outlets. Oligopoly dominates sectors like telecommunications and airlines, where only a few major firms compete. Meanwhile, monopoly arises when a single company controls an entire industry due to high entry barriers. TLIV's real-world business decisions demonstrate the behavior typical of firms in monopolistic competition. For example, when new bubble tea trends emerge, such as brown sugar pearls or cheese-topped tea, TLIV responds quickly by releasing its own versions. This fast adaptation keeps the brand relevant against new entrants like Tiger Sugar or Xing Fu Tang that temporarily dominate trends. Another competitive strategy is value innovation. TLIV often introduces bundle deals such as buy one free one, lunchtime combos, or RM5, RM7 promotion days to attract budget-conscious customers. These promotions give TLIV an edge during periods when consumers are more selective with their spending. TLIV also invests heavily in partnerships and collaborations. For instance, collaborations with brands like Milo, Wall's Ice Cream, and popular local influencers allow TLIV to reach new audiences and refresh customer interest. This type of marketing is crucial in monopolistic competition, where customers can easily switch to another brand. TLIV's success comes from constantly reinventing itself to compete against a large number of rivals, all offering closely related products.
Malaysia Airlines, MAS, operates in a real oligopolistic market where only a few airlines dominate the national aviation industry. Its main competitors include AirAsia and Batik Air Malaysia. Because there are only a handful of major firms, every pricing decision, route launch, or promotional campaign by one airline can directly affect the others. For example, when AirAsia introduces a major fare discount, MAS often responds with competitive promotions on similar routes to maintain its passenger share. This interdependence is a clear sign of oligopoly at work. MAS also competes by offering services that low-cost carriers do not, including full meals, checked baggage, and premium cabin experiences. These features allow MAS to attract travelers who prefer comfort, long-haul flights, or business travel. The aviation sector is also shaped by high entry barriers. New airlines rarely enter the market because aircraft acquisition, pilot training, regulatory approvals, and airport slot allocation require enormous investment. These barriers protect the existing airlines, MAS, AirAsia, and Batik Air, from immediate threats of new competition. In Malaysia's real-life aviation landscape, MAS strategic decisions must always consider the actions of its few close competitors, making it a clear example of how oligopoly operates in practice. Economic policies guide a nation's economic direction. In Malaysia, fiscal policy involves government decisions on spending, subsidies, and taxation to support growth and protect citizens. Monetary policy, implemented by Bank Negara Malaysia, focuses on managing interest rates and money supply to control inflation and stabilize the ringgit. These policies have real impacts on businesses. Lower interest rates can encourage expansion, while higher rates may slow borrowing. By understanding these policies, we gain insight into how Malaysia maintains economic stability and supports long-term development.
Monetary policy refers to the actions taken by a country's central bank to control the money supply, interest rates, and overall financial conditions in the economy. In Malaysia, this role is carried out by Bank Negara Malaysia, or BNM. The main objectives of monetary policy are to maintain price stability, support sustainable economic growth, and ensure a stable financial system. When inflation rises too quickly, the central bank may increase the overnight policy rate, or OPR. A higher OPR makes borrowing more expensive, reducing spending and cooling down inflation. On the other hand, during economic slowdowns, BNM may lower the OPR to encourage borrowing, business expansion, and consumer spending. Besides interest rates, monetary policy also includes managing liquidity in the banking system and guiding expectations through official statements. These tools influence how much people spend, how much businesses invest, and how the value of the ringgit performs. Overall, monetary policy affects every sector of the economy: retail, manufacturing, services, and even aviation. It shapes consumer confidence, business costs, and long-term investment decisions.
For a brand like Tea-Liv, Malaysia's well-known beverage chain, monetary policy directly influences both its operational costs and customer demand. When BNM raises the OPR, commercial banks quickly adjust their lending rates. This means Tea-Liv faces higher financing costs for opening new outlets, purchasing equipment, or funding renovations. If the chain relies on business loans, the higher interest rates can slow down expansion plans. At the same time, consumers also feel the pressure of higher borrowing costs. Monthly installments for cars, houses, and personal loans become more expensive, leaving households with less disposable income. As a result, spending on non-essential items like premium bubble tea may decline. Tea-Liv might experience lower foot traffic or customers shifting to cheaper drink options. On the supply side, tighter monetary conditions can affect ingredient prices and import costs. For example, tea leaves, dairy products, or packaging materials imported using foreign currencies may become more expensive if the ringgit weakens under uncertain monetary conditions. TLIV may need to adjust menu prices or introduce promotions to balance between cost and demand. However, during periods of monetary easing, when B&M lowers interest rates, TLIV is likely to benefit. Expansion becomes cheaper, consumer spending improves, and new store growth becomes more viable.
Malaysia Airlines, or MAS, is even more sensitive to monetary policy changes because the aviation industry relies heavily on borrowing, investment, and foreign currency transactions. When interest rates rise, MAS faces higher financing costs for aircraft leasing, fleet renewal, and operational loans. These costs can significantly affect profitability, especially in a low-margin industry. Monetary policy also shapes exchange rates. A weaker ringgit increases the cost of aviation fuel, aircraft parts, and maintenance services, most of which are priced in US dollars. As operating expenses rise, MAS may need to increase ticket prices or reduce certain routes. Both strategies can affect passenger demand. Furthermore, tight monetary policy tends to slow economic growth, reducing business travel and tourism. Lower consumer spending may reduce the number of passengers and limit MAS revenue. Conversely, when B&M loosens monetary policy, borrowing becomes cheaper, the ringgit may strengthen, and travel demand generally increases. This helps MAS stabilize its finances and plan long-term strategies more confidently.
As we reach the end of our presentation, it becomes clear that monopolistic competition, oligopoly, and monetary policy each play an important role in shaping Malaysia's economic environment. Through the example of TLIV, we have seen how monopolistic competition encourages variety, creativity, and customer-focused innovation. In a market filled with countless beverage brands, TLIV has to compete not only through price, but through experience, branding, location strategy, and new product development. This type of market structure pushes businesses to evolve constantly, and ultimately benefits consumers by giving them more choices, better quality, and a more exciting market overall. It shows how competition can drive firms to improve while still allowing individual identity to shine.
Meanwhile, Malaysia Airlines represents the very different dynamics of an oligopolistic market. In this structure, only a few major firms dominate, and each one's decisions have significant consequences for the others. MAS must carefully monitor the strategies of competitors like AirAsia and Batik Air, whether in pricing, route planning, or promotional timing. Oligopoly creates an environment where every move is strategic and long-term planning is essential. High barriers to entry also mean that competition is concentrated, but intense. MAS must therefore maintain strong service quality, operational efficiency, and brand reputation to remain competitive. This real-world example shows how oligopolies rely on stability, planning, and market power to deliver services efficiently, especially in industries that require high investment and advanced expertise.
Finally, monetary policy provides the foundation that supports both types of market structures. Decisions made by Bank Negara Malaysia, such as adjusting interest rates and managing money supply, have direct impacts on business behavior, investment decisions, and consumer spending. When interest rates rise, firms may delay expansion or reduce borrowing. When rates fall, companies like TLive can open new outlets more easily, and consumers may spend more on non-essential items. For Malaysia Airlines, monetary policy affects fuel costs, aircraft financing, currency stability, and ticket demand. This shows that national-level policy decisions shape the operating environment for both small consumer brands and large-scale aviation companies. Together, monopolistic competition, oligopoly, and monetary policy create a dynamic and interconnected ecosystem. One encourages creativity, another drives structured competition, and the third ensures stability across the entire economy. By understanding how these three elements interact, we gain a clearer picture of how Malaysian businesses navigate challenges, respond to opportunities, and contribute to a strong and resilient economy.